Yeah, what's interesting is that Bitcoin actually, the demand in terms of aggregate dollars is actually going up.
Having worked, but did it really create that catalyst for crypto that everyone expected?
Yeah, one of the things that everyone wants to see is like the halving occurs and a minute later, all of a sudden the price goes up or down or sideways, what's going to occur. But what we've seen historically is that the halving does take some time to kind of work in. There was great research that came out of Bitwise, and what they showed was in the month before the halving, the average return over the last couple of bull markets has been 19%. In the month after the halving, it's been 1.7%. So you'd say, oh, if I look at it as a 30-day before, 30-day after, it doesn't really matter. But if you actually look at it over a longer time frame, let's say 12 months or 18 months, the halving has marked a point where then we go up. And so it's just classic economics 101, right? If demand stays the same and you take away half of the incoming supply, the price has to adjust up or down to accommodate everyone. I think that this time won't be any different.
But at what point do you know that demand will continue at the same pace that it has? We've already seen a lot of those flows into the ETFs start to moderate.
Yeah, what's interesting is that Bitcoin actually, the demand in terms of aggregate dollars is actually going up. And so what you would look at is you say, oh, there's lots of people who already own Bitcoin. Who else is going to buy Bitcoin? Well, the biggest pools of capital are still left. And so if you look at some of these large sovereign wealth funds, et cetera, the ETFs introduce a way for them to actually get price exposure without taking control of the Bitcoin. So you can imagine there's certain countries around the world that if all of a sudden they were buying Bitcoin, taking self-custody, people would be asking some questions. Why are you doing that, right? Why are you taking your central bank reserves and getting it out of these other assets that the U.S. likes you to have it in? And so I do think that the ETFs will allow that price exposure. There are sovereign wealths that are going to go ahead and allocate to it. The question is just how much higher will Bitcoin go in this bull market? And that's what everyone's trying to figure out.
There was a lot of talk before we sort of ended up in this new bull market. There was a lot of talk about regulation, right? Of course, you got whatever the SEC was trying to do. And then you had other regulators across the world basically trying to clamp down on this. You don't really hear about that much anymore. I think they kind of feel like, well, we've put out our proposals and, that's the best we can do.
Yeah. So I think that Bitcoin is the first asset that's kind of gotten through the regulatory gauntlet, right? Mm-hmm. And regulators around the world say, hey, this is not a security. This thing is kind of a digital gold, and we're okay with that and going to treat it that way. The other assets very much feel like they're still in the gauntlet, right? Yeah. And constantly there are regulators both in the United States and elsewhere trying to figure out how to classify these things. Mm-hmm. The nice thing about the United States capital markets is that usually the regulators figure it out. It may be tumultuous on the way there, but eventually they will reach some agreement and they'll all treat it the same way. And that'll provide clarity for people to go and start building in this industry in a way that I think is conducive to what we're trying to accomplish in America.
I know some of that regulatory risk has shifted away to Bitcoin, to some of the other digital assets, but there's also been a lot of talk about maybe a potential upswing for some of those assets as well. The idea that they haven't necessarily participated in the rally to the same extent as Bitcoin.
One of the most interesting things that people kind of wake up to coming out of the crypto world is there might be more degens on Wall Street than there are in the crypto world, right? If you say to someone, hey, you can get 10x leverage, if you say that there's 100x opportunity, there's a lot of people in suits and ties that are going to pay attention. Yeah. And so I do think that we like to have a black and white world and say, oh, like all the risk takers are over here in crypto, all of the smart money is on Wall Street. But naturally, there are just as many risk takers, if not more, on Wall Street. And so what I think is now going to be a big narrative going over the next 12 months, how do those investors get access to those assets, right? And so you're going to see altcoin ETFs, you're going to see them start to create all kinds of different funds in the private markets, closed end, open end, et cetera, where they are going to try to get at these assets that they believe are asymmetric because they want returns. And there's not that many returns in other asset classes.
Anthony, I know you invest kind of across asset here. I mean, which is a better risk asset to you at this point?
Yeah, there's a really interesting bifurcation that's occurring. If you're optimizing solely for return, I think people will continue to allocate to Bitcoin and cryptocurrencies because they see it as a more asymmetric asset. It's got a bigger tailwind, more capital flowing in there. One of the things that people are not talking about yet, though, is people in the crypto industry who have built wealth up, when they go to a bank and they want to get a mortgage, they want to get some sort of loan, et cetera, the banks write their crypto assets to zero. And so now all of a sudden, if you show up and let's say you have $10 million of crypto and you have $100,000 in the bank says you're worth $100,000. And so what I do see a lot of people in the crypto world is they're starting to diversify slightly, not a ton, but slightly, because they're trying to actually say, look, I'm going to get married. I'm going to get kids. I'm going to try to buy a house. I got to go kind of live my life. And so I think it's going to be very interesting. The wealth generation in crypto starts to seek into these other asset classes.
And can they do that, though? Can they sort of provide that without actually giving up control or basically giving up ownership?
So this is where we're never going to have a competition, right? Yeah. Obviously, the legacy folks, if you go talk to the banks, their official position is, hey, we don't touch those assets. The younger people in the banks, they want these people to be able to interface with their financial services, et cetera. But right now, you've got to sell the crypto to be able to get fiat or kind of traditional assets put into the bank. Yeah. What I do think is is happening, though, is there's people in the crypto world who say, well, why don't we just go offer those same financial services and we'll touch the crypto. You won't have to sell it. And I think that's where the competition is going to be. Will the old incumbents win, or will these new players come out on top?